So we're talking about what is money. Money is a medium of exchange. We start with a simple barter transaction where we have two sides to the transaction. One is a farmer and the other one is a carpenter. So the farmer wants to sell the produce because that's what he has, and he needs furniture, and the carpenter produces furniture and he needs produce. So this is a perfect match. Farmer sells the produce, carpenter sells the furniture, and they swap, and a barter transaction takes place. But what if one of these parties don't need the other product? Then the transaction won't take place, and each of these two parties won't be able to get what they need. So we need something better. So historically, we used precious metals like gold or silver to facilitate this trade. Instead of the clunkiness of the barter, we use these precious metals to facilitate and to make these trades more efficient. In which case, we don't really need farmer or the carpenter to have a simultaneous need for each other's products. But this time, the carpenter has the gold and he needs to buy the produce. So the farmer happily sells the produce and receives gold. And if he needs something else, he can just use that gold to buy it. So they don't have to have a simultaneous need for each other's products. They could simply use the gold as money, as the medium of exchange for this trade to take place. So the money facilitates trade. Money makes the trade more efficient. Money ensures that the trade takes place. And the gold and the silver are, the oldest forms of currency. So we used gold as currency, but it was heavy, and it actually had an upkeep. Um, and there was problems of fraud. People blended gold with copper and other metals so that the purity became an issue, and therefore the value of gold became an issue. And ultimately, there's a limited amount of gold in the world. So with ever-growing world, ever-growing economies, ever-growing trade, the gold obviously won't be enough to facilitate trade internationally. So it wasn't as a currency, as a medium of exchange. Yes, it was efficient or more efficient than the barter, and it was a currency, but in and of itself was not sufficient for today's international trading environment. So we came with a answer, and that's the banknote. We actually have financial institutions printing banknotes for the gold that they had in their inventory. So back in the old days, we actually had different banks printing their own banknotes, claiming that each banknote issued by that specific bank corresponds to X amount of gold or silver or some other precious metal. And people used to respect this. But then again, obviously, banknotes were much easier to create counterfeits, and therefore it was not as efficient as they're supposed to be. So they're still easier than gold. They don't require as much upkeep. They're not heavy, but the counterfeit issue was a significant deal, and everybody seemed to print their own currency, put their own faces on the currency and banknotes, and it became crowded in the money um, in the money sense. So, however, the trade usually takes place simply replacing gold with the banknote. So the farmer or the carpenter simply buys the product that they need and pay with the cash or the banknotes that they have obtained from their own trades. So the paper money is not without its problems. Obviously, counterfeit banknotes are significant problems. In fact, that was one of the reasons that we had the Secret Service to begin with, and that's why the Secret Service is part of the Treasury. And this was an international problem, not specific to the U.S. Um, but then again, which bank prints the banknotes became an issue. Which bank is more reputable? Um, is it a bank that's owned by the government, or that's the bank or the government itself printing the banknotes, and that became an issue. And what if the banks lie? What if they don't have the amount of gold that they say they do, and they just keep printing the banknotes, even though they don't have enough gold as they claim that they did? And then obviously, uh, if there's more printing than they're supposed to, it creates an inflation of the banknotes until somebody realizes, in which case the currency loses value because we just simply kept printing. And even today, when the US government or any other government starts creating a bigger money supply than that's needed, or than the GDP or the economic growth requires, then we start to have an inflation of currency in our economy. So the money today is not backed by gold anymore. In fact, in God we trust. So the currency and the banknote are actually produced by the US Treasury and the Treasury of each corresponding country. And the central banks, and in the case of the US, the Federal Reserve, decides the supply of the money. So the money belongs to the US Treasury, yes, but the Federal Reserve or the central bank decides on how much money our economy needs. So that's about it. Thank you.